On today's Breaking View, central bank policy similarities matter more than divergence, and why politics is becoming less of a threat for investors. Two pieces by Edward Hadas, Reuters Breaking View's economics editor, who joins me in the studio. Two thought-provoking pieces, I've got to say. Let's start with the central bank's piece. Financial markets can clearly make the most of divergent policies at central banks, right? And this is what they've been doing. But you're saying the similarities are greater than the divergences.
If you're a trader in currency, you think, well, the U.S. is tightening or getting in the way towards tightening, and if anything, the Bank of Japan and the European Central Bank are going to be loosening this year. The Bank of Japan definitely, ECB may be under pressure to do so if deflation starts to come in. And so you think, okay, that's basically that means the dollar will be rising and the euro will be weakening, and that's a trade. We're happy.
Bam.
In fact, we recommended that. Ian Campbell recommended that at the end of the year as the easiest trade in the world.
Yeah.
But if you step back an instant and think, I'm looking at it from the real economy perspective, what do you see? You see all these banks still have negative real interest rates. You see the Fed committed to tightening, but at a pace that by economic standards is pretty glacial. So you've got positive GDP trends and still zero interest rates and
all highly stimulative policies.
All highly stimulative all around the world.
But that doesn't matter too much to the traders.
Well, what do they care? What they care about is the difference, the difference between this one being this stimulative and this one being a little bit less stimulative, and the difference in direction. This one's becoming more stimulative, this one's becoming less stimulative. You trade by making a pair, but from the real economy point of view, you step back and you say, yep, they're all pointing in the same direction, just at slightly different angles.
And what's going to change this year?
This year, we will see this divergence, and hopefully by the end of the year, we'll have enough of a stronger economy that they're all going to be pointing in the same direction again, that is towards tightening, but still probably stimulative for another year or two, highly stimulative for another year or two to come.
Okay. Your other piece is also about how investors should react to political risk. Right. And you start the piece by citing the suicide bombs in Russia, possible government collapse in Turkey, civil war in Iraq, possible civil war in Iraq, and say despite that, things don't look so bad. Why?
Why? Because you got to look at it. I mean, here I'm going to be an investor for a moment and not a geopolitical strategist. I'm going to say, look, where is the economy big? And you go through it. U.S. actually looks better than it did a year ago. They've got a budget. Eurozone looks better than it did a year ago. They've got a central bank, and it looks like they're making progress towards banking
They each
union.
account for a quarter of the world's output.
And each of those are a quarter. Go down to China. A year ago, we were talking about the new regime instability, Bo Xilai. Oh, it's not going to work. Now they've got not only a new regime without any tremor, but they've got a reform program that seems neither too risky nor too conservative. Japan, Abenomics seems to be on the way. We're at 80% of GDP. We haven't even, found a trouble zone.
What about the troublesome 15%? Or 20%, or whatever it is.
I mean, at most it's 15 or 20%. And really, the only part that you really want to worry about is the oil belt, as it were, in the Middle East. And one could easily imagine a scenario there where you'd have serious trouble, Saudi Arabia, Iran, all the different problems there. And that's something one should always worry about. But even there, the geographical diversity of oil has increased. The U.S. is getting close to self-sufficiency. It looks like less of a threat than it did 2 or 3 years ago, the kind of damage that you could do from a real blow up in the oil belt. And up to now, really, even there, the damage has been in countries that are not big producers. They've been in Libya, Syria, and Iraq has stabilized. Iran has stabilized. It looks like Iran's getting better. Whew, so little to worry about.
We will see. Thanks a lot, Edward. Edward Hadas, economics editor at Breaking Views. For more insight, watch our US Breaking Views show every day, 12:30 Eastern, 17:30 GMT. I'm Axel Threlfall. This is Reuters.